Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of October 13th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week we saw Delaware mortgage rates remain near the lows of the year for 2014, but the short-term risk is for mortgage rates to move higher. If you take a look at the bond chart on the screen, you can see that we hit the high for the year for the bond, and then the big red candle on Thursday and then a red candle on Friday means the bond did sell off. The short-term trend was for bonds to move higher, but being at this tough ceiling of resistance, and if they did sell off, we see much more downside risk than the upside, so we are going to recommend locking in your Delaware mortgage rate. Take advantage of the record low rates for the year. If you're out more than 60 days, you could float, but the short-term risk is for bond traders to lock in their profits, sell off the bonds, and mortgage interest rates to move higher. Now, if we look at the economic news that came in last week, the first one that we look at is the weekly initial jobless claim report. Came out on Thursday. Came in very good at 287,000 claims for the week. That was well below the 293,000 expected. So initial jobless claims are still coming in good, below the 300,000, which definitely bodes well for the labor market. And then the big news last week was Wednesday. The Feds had their meeting. I mean, not their meeting, but they released the minutes from their meeting the previous week. And the minutes kind of gave the stock market a rally, boosted back the losses they were having, and that's kind of what hurt the bond market on Thursday and Friday. Basically, they said they see inflation remaining below 2% for at least the next 2 years. And they also gave indication that they kind of changed their stance. They're no longer looking to raise short-term interest rates sooner, but they're kind of putting that off. It could be until the end of next year, and that's because of global economic slowdown and the strengthening dollar, which could have an adverse effect to U.S. companies trading overseas. So the Feds are looking at the economy to not grow as well as they predicted, so they are backing off on the language, saying they're going to move short-term interest rates up sooner, so that's going to get pushed back. So that could help the bond market in the long term, but we'll have to see how that plays out. And then in housing news, CoreLogic reported their August home price index for 2014. It showed a 6.45% increase year over year for home prices. That's down from July's year over year of 6.81%. And CoreLogic also predicts 5.2% home price increase year over year for August 2015. So that's right in the sweet spot range. 5 to 6% is the historical average annual home appreciation. So that's good numbers. That means the housing market is a sustainable ride of appreciating year over year. In the local news, the next free first-time homebuyer seminar is this Saturday, October 18th in Newark, Delaware at the Christiana Hilton Hotel. That's from 10 a.m. to noon. You can register for that event by giving us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.